Good afternoon, friends. Wherever you may be in the world, good afternoon, good morning, and good evening, everybody. This is Saravanan from Enlight Trading Solutions recording this video on dynamic convergence techniques. So, dynamic convergence is a concept where it keeps you in very clear about what you are doing in trading. So it identifies the trade very early and takes you to almost all the moves of a swing or a trend it may be. Okay, so what is dynamic convergence? Convergence of two lines in a decon indicator when the price finds a low or high in a given period of time. That is, we call it as dynamic convergence. Convergence of two lines in a decon indicator. Decon means dynamic convergence indicator when the price finds a low or high in a given period of time. Okay, convergence of two lines in a decon indicator when the price finds a low or high in a given period of time. For example, suppose market makes a high, any market, any script, okay. At the same time, in your decon indicator, you find a convergence of two lines. It means this is the real high of the market. It is time to sell. This is called sell convergence. Suppose it is minute 15 chart, that is a real high. This is a real selling opportunity for you. Okay. So time refers to this time frame. It may be minute 15, minute 5, minute 30, hour 1, hour 4, daily, anything may be. So if a market makes a high, okay, when that high is there in the market, you see at bottom, if there is a convergence of two lines, it refers this high is going to be the real high at minute 15. Market will come down a little bit, so you can capitalize on that down move by taking a sell entry. In the same way, if market finds a low, okay, at the same time, if you have a convergence of two lines at that low, it means this is a real low of the market where you can buy the market. Okay, so that's what the dynamic convergence means. This is called buy convergence. This is called sell convergence. Once again, this may be minute 5. So in minute 5 you find a buy convergence. It means it's a time to buy in minute 5. In minute 15 if you find a sell convergence, it's a time to sell. This is how the dynamic convergence techniques works. I have just told you the very basic of it. The very basic idea of dynamic convergence is selling at the top and buying at the very bottom of the market in a given period of time. Okay. This is what actually means dynamic convergence. This is how it works. Okay, so we'll see some few examples. In this chart, this is called buy convergence. If you see a blue line or a green line, it is a buy convergence lines. In this chart, if you see, there is a convergence of two lines at a low. Okay, so time to buy. Same thing here. So time to buy. So convergence start at this very bottom, the middle of this two windows. This is a convergence. It ends at this extreme area. Any convergence ends at this extreme area. Okay, if you buy it here, you should not think of closing your trade here because this is not reached your extreme area. This high will be broken later. Okay, when this convergence reaches this extreme area, this high will be broken. That's what happened. You can see when this convergence reached its extreme, the high gets broken. Okay, that's the thing. That's what dynamic convergence is all about. In the same way, if you see, this is called cell convergence. If you see a red line, red lines converging together, cell convergence, it happens at the high. Same thing here. This is the real high of the market. Market tends to come down after this. But when this low happened, the convergence is not at its extreme. It means that this low is going to be broken sometime later. That's what happened. When this convergence travels its extreme area, this low gets broken. Okay, so you try to sell at a high, which is how do you know that it is a high? There is a convergence. There is a convergence. So it's a time to sell. This is what all about dynamic convergence. So we have two types of convergence, buy convergence. So if you see, this is a buy convergence. This is a reference point. This is a fresh support. So there is a convergence, the time to buy, your target exit when it reaches extreme area. You can exit at this point or here. So this is the exit, first exit point you get. This is what? This is the first exit point you get. So the convergence reaches at this extreme area. Or it travels, as long as it travels in the extreme area, the market keeps on moving up, up and up and up. Okay. The highs keeps getting broken. In the same way, cell convergence. So when you see there is a convergence at the top, here, 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 here also. Then there are three cell convergence, market comes down after that. When convergence reaches this extreme area, all the lows gets broken. It finds the extreme area here. This is where your first exit point comes. Okay. So I did a trade. This is a buy convergence. You can see in TCS is a buy convergence. Here you can see the buy convergence, market takes a fresh support. So I was late on the screen that day, 28th of February. I entered here. Okay. So you can see this is what, based on this buy convergence, still it's going very strong. 2281 the high. Okay, you can see what I did. It's a good buy entry. You can see this is my 2236 is my entry. This is where I am now. I entered 3 lots. This is my 17,218 rupees profit I am in right now. So this entry is based on that dynamic convergence technique. Buy convergence, I saw a buy convergence, I jumped in. So another trade I'll show you. This is again TCS. This is where we got in our buy trades. Okay, our buy trades, our exit was here. Now on 3rd of on Friday, this is 28th, 3rd, 4th, 5th, 6th, 7th. On 7th, on 6th we got in again towards the shorter side because we had a sell convergence here. Okay, market will come down after this. It came down, we noticed it late, but we got in on 6th. We kept that trade open until 7th. The convergence reached its extreme. It gave us this much of profit. Okay, so you can see again TCS provided a good sell entry based on this sell convergence. Okay, we got in right in here, we exited right here. This is our trade. Okay, how much we got? So just we'll show you that so TCS we got 54,156. We bought 750 quantities. 750 quantities. 54,456. I think we bought 6 lots. Okay, another trade. Same day we bought Bank of Baroda. So you can see here Bank of Baroda, what did we bought it here? 226, 626 we bought it here based on this buy convergence here. Okay, we bought it right here, we sold it right here 645. Okay, so there's a convergence reached its extreme area. Okay, this is our trade in Bank of Baroda. You can see based on this buy convergence. So you can see 645, 626, our sell average is 645. We got some good money, 15,000 something here. You can see. 19, sorry. So totally on that day alone we got it 73,000 plus profit using this simple technique, dynamic convergence. Okay, so what you have seen is very simple setup of dynamic convergence. When you come to our class, we will show you the advanced version, how it works beautifully. It takes into the trade and keeps you in the trade until its very end. So you can maximize your profit, stretch your profit up to the maximum point with very minimum risk, because we are getting into the trade at very bottom or very top, so the risk, our risk always very minimum, but our profits are always very big. So it gives it gives a lot of confidence to go for volume trading. You can increase your lot size. You can use the opportunity to maximize your profit. Don't worry about money management, everything and all. So use the opportunity and get as much as possible from the market. Okay. Thank you very much. I'll meet you in another video.